Walmart reported quarterly financial results that provided huge insights for all stock market investors, not just Walmart investors. Walmart's business is so large, encompassing almost $700 billion in annual sales, that what happens with Walmart has implications for the broader economy and worldwide stock investors. You always want to tune into Walmart's results to see what's going on with consumers, with US consumers, with international consumers, what's going on with major business trends, with costs, labor, etc. You get so much insight from evaluating Walmart's results that you can use to make investment decisions on a broader set of companies. That's why I always make it a point to evaluate Walmart's quarterly results. That's what I'll do here in this video. I'll also update my buy or sell recommendation for Walmart stock. Coming into this quarter, I had rated Walmart stock as a hold. I told investors that Walmart stock was too expensive, and I last updated this recommendation around May when Walmart was facing increasing headwinds, but yet the valuation of Walmart stock was more expensive than that of Amazon, which doesn't usually happen. Now, I will admit that Walmart's execution has been phenomenal over the recent few years, and management is doing an excellent job with this company. But still, I felt the enthusiasm was a little bit overdone for Walmart stock, and I'll let you know if I still feel that way with the valuation and the stock following these quarterly financial results. So let's dive into this interesting company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Walmart's second quarter highlights included revenue of $177 billion for the quarter. That's just for the quarter, just showing how massive this company is. Many businesses will never generate this much revenue in their entire time of existence. Walmart generates this revenue in a single quarter, and this was up 4.8% compared to the same quarter last year. That's also impressive growth and faster than usual for Walmart to grow its revenue by this level. Global e-commerce sales, or what's facilitating this overall revenue growth, increased 25%, led by store-fulfilled pickup and delivery and marketplace. And this one part of its business is the reason why Walmart stock was trading at a more expensive valuation than Amazon stock, because Walmart's global e-commerce business was growing much faster than Amazon's e-commerce business. Walmart is gaining market share as it's really leaning in to its online business. Before 2020, before the pandemic, Walmart was taking slow incremental steps in its online business. It didn't want to cannibalize its in-store business because it felt like in-store transactions were so much more profitable, and it was going to take large investments in fulfillment and infrastructure and back-end technology to build out its online business. So it did so very slowly until that is the pandemic, when it really accelerated its investments, and those investments are working really well, much better than expected. In fact, the buy online and pick up in Walmart parking lot is incredibly popular. Also, buying online and having Walmart deliver those items in the same day is also very popular, and that's giving the company an advantage against Amazon, which has historically had a huge advantage in online sales. Surprisingly, its gross margin increased by 4 basis points, led by Walmart US. And I say surprisingly because the tariff impacts are beginning to hit, although they're beginning to hit much more slowly. They're not coming as quickly because the company front-loaded some of its inventory purchases, and some of the inventory that will be impacted by tariffs will not be arriving or will not be in store until later this year. The management team did say that it's increasing the prices of some items as a result of tariffs, but it's doing so more strategically, not across the board price increases. The current inflation that US consumers are facing is different than the inflation US consumers faced as after the pandemic during the economic reopening. That inflation was a result of an increase in demand, in other words, called demand pull inflation, when demand for products and services suddenly rises. And that's what happened in the aftermath of the pandemic when governments worldwide, and especially in the United States, sent out trillions of dollars of stimulus in the form of increased unemployment benefits, stimulus checks directly sent to consumers, stimulus money sent to businesses, and that created a surge in demand, which then created the inflation. The current inflation that US consumers are facing is a result of a cost increase. In other words, a cost push inflation. And this is a result of the tariffs increasing the prices to import goods. And so that's a result of an increase in cost. It's not as a result of an increase in demand. So businesses will not do the same strategy. They might not do the same strategy they did during the pandemic, which was to just raise prices. And companies like Walmart, Target, Procter & Gamble, Coca-Cola, Pepsi-Cola, almost every single company increased prices on their products and services as a result of the inflation. The current inflation may need a different strategy. It may result in companies absorbing a lot more of those increases in inflation and cost because it's a result of an increase in cost. It's not a demand pull. So the difference is that previously, when they increased prices, customers just bought whatever at the same amount. They didn't pull back. The current inflation may result in a pullback in consumer spending because their purchasing power didn't increase. It's not like consumers got more money to spend. It's just that the cost of everything is going up. And so consumers don't have the extra money to pay that higher cost. So businesses like Walmart are being more strategic, more precise in their more surgical in their price increases. The company's operating cash flow increased by 2 billion to 18.4 billion and free cash flow increased to 6.9 billion. Inventory was up by 2.1 billion to 57.7 billion dollars. And so this is Walmart getting ahead of the holiday and the back to school season, getting their inventory in stores before the impacts of tariffs. Walmart reported transactions increased by 1.5%. That's down from the 3.6% increase in transactions in the same quarter last year. The average ticket, the amount consumers spent, increased by 3.1% compared to 0.6%. So this is early evidence of higher prices impacting consumers at Walmart US. E-commerce contribution to sales growth was 420 basis points, up from 300 basis points in the same quarter last year. This is evidence of Walmart gaining market share in the online channel as consumers are really appreciating the investments Walmart has made in its e-commerce channels. So let's visit valuation now and determine if Walmart stock is still overvalued. And the answer is yes. My intrinsic value per share calculation, which I updated following Walmart's earnings release, decreased slightly to $72 per share. It previously was around $77 per share. The current market price is $97.41, following the 5% decline after the company's earnings release. Walmart did mention that they expect sales growth to be better this year than they initially anticipated. This is most likely a result of higher prices. So, of course, if you're selling products at higher prices, your total revenue will be higher, and consumers are absorbing most of those higher prices. As comparatively speaking, Walmart still offers consumers better prices, right? The higher priced companies are taking the biggest hit here as Target reported sales declines continued as consumers look for more value and Target doesn't provide that value. Target provides a more comfortable shopping experience, more luxury, more leisure, better store environment, less crowded stores, more organized stores. And consumers are not looking for those premium experiences. They're looking to get the most bang for their buck. And companies like Walmart and Costco will benefit in that environment. Furthermore, when I look at Walmart's valuation on a forward PE basis, it's the most expensive it's been in a lot of years. It's trading at a forward PE of 36.5, around the levels of Amazon. Of course, It's because Walmart's e-commerce business is thriving and continues to thrive, but the business faces near-term headwinds with the increase in tariffs, the increase in trade barriers, and lower income consumers facing the biggest pressure from these increase in tariffs. And Walmart has a large percentage of its customer base or the lower income consumers, so that part of its consumer base is under pressure. Although on the flip side, Walmart is attracting more higher income households as they trade down and go to Walmart for more value and trade down from other more expensive stores. So I had Walmart stock rated as a buy all year long, and I'm updating that recommendation again today, reiterating the fact that Walmart is performing excellently, but the valuation is expensive relative to the near-term prospects. I would wait for a better price to get Walmart stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.